Wayne, welcome to the show. Thanks for joining us.
Thanks, Darren. Great to be here and excited to have a chat with you.
Do you want to start by just telling us a little bit about your early entrepreneurial days?
Mate, I guess I've always been an entrepreneur if I look back on it. I came from a middle-class family, and really my mum and dad encouraged me to do a paper run, wash cars, mow lawns when I was a young fella. And that's how we afforded to, I guess, I bought my first boogie board and got to go to the beach. So yeah, I started early, and then I think I did a range of roles in different organizations, and by and large, they were fairly entrepreneurial.
And what about business? When did you first start business?
So I graduated year 12, went to the army, and my first 10 years really I spent as an army officer in Signals Corps. And I did a couple of things while I was in the army that were pretty entrepreneurial. Like, I built a unit that ended up in special forces, and that was like, hey, can you come and create this thing? And so that was like, even though it wasn't commercial, it was still pretty entrepreneurial. And then my last gig in the army was as the signals officer for aviation, and I built the first drone for the army. And again, that was like, clean sheet of paper, can you go and do this? And I had Boeing as a subcontractor and DSTO and Defence Science and Tech Organisation. They both offered me a job after that. And so I went to work for Boeing. I left the army in 1999 and went to work for Boeing. And in Boeing, I created stuff. Like, I created new business opportunities and did that for a couple of years. And I guess even there, I was entrepreneurial. I started my first side venture in 2000 with a couple of guys I'd met while I was in the army. And we built a business selling RF attenuators that plug into your hands-free cable. We designed a solution, took it to market, got on Channel 9, sold 5,000 or 6,000 units. We were way too early. And so that was my first kind of personal business. I've gone on to start, found, run, grow 13 different businesses over my career. Yeah, notably, I guess 2000, just after 2000, I left Boeing and went to work for a big tech company called Mincom. It was in Mincom that I learned a lot about IT, a lot about corporate IT, big scale infrastructure. I went into their innovation team, helped build a product that we took to market globally. I took it to market. One of my clients was OneSteel, and they said, the CIO there said, why are you working for someone else? Why don't you go and do this for yourself? And that was the confidence I guess I needed to go and start my first real company, which was a consulting company. I grew that and sold it to the team because I didn't really want to do IT consulting. I was more interested in building businesses. So I went into strategy consulting, grew that, learned my first founder lesson where I fell out with my co-founder for a variety of reasons. And so I went again and started the third consulting company and built a really nice house at Wivenhoe Dam, got flooded 5 months later. And that was a catalyst to have a look at my life. And I got sick of being the product. And my wife was like, you can't be the product, because if something happens to you, we're stuffed. So then I guess I actually went to the US with a group of mates, and we were looking at various business ideas through an organization called EO, the Entrepreneurs Organization. I've been a member of that for a while, and I was on a bus in Texas, and I rang a mate and said, hey, do you want to start an engineering company? So we started an electrical and mechanical engineering company, and it was on site working at Dalrymple Bay Coal Terminal that we identified a problem with engineering data management. So managing engineering drawings and making sure the right drawing was available so that you could plan and do work. Realized there wasn't a solution to that, built a tech company called RedEye. So I started that in 2012, grew that for 10 years into a global tech company, helping companies manage trillions of dollars of infrastructure. And so we had customers like all the power industry in New Zealand. We managed Hoover Dams, engineering information. We managed road networks and healthcare networks and mining companies like BHP was our first client. We were literally the first cloud product in BHP in 2013.
Yeah, right.
So this is back before cloud was popular, and certainly before it was an enterprise grade thing. So I exited that business in December 23 and exited the last bit of my engineering company in 24. and have really been investing in early stage tech and other things through my current company, which is called Prtnr.
When you look at what you've built and created, do you look at it as, how do you think of yourself in terms of as an entrepreneur? Do you look at, you've created a SaaS tech business, or is it an engineering consultancy business on the other side? How do you describe yourself?
Look, yes, I describe myself as an entrepreneur, right?
Yeah.
I'm entrepreneurial. I'm really just a curious problem solver that likes to optimize value, right?
Yep.
And so I see a problem. I typically care about people, and the customers that I ended up getting at RedEye, some of those are my best friends today.
Yeah.
Because I build genuine relationships with people, and that's why I call my new company Prtnr, right? Because that's how I approach life. I see myself as an entrepreneur. I see myself as a problem solver, and I see myself as someone that can look big picture in the market, in the geopolitical environment, and I try and look to see what's coming, and I try and join dots. I'm not particularly excellent at joining dots, but I'm good at it. And so I tend to want to build businesses that are future looking and that have the potential to make an impact, really.
When you notice a problem, you've had a bunch of different businesses where it sounds like you've almost been there, seen a problem and noticed it, and then worked out the solution, as opposed to go looking for the problem to solve, if that makes sense. Is it, it's been right there in front of you and you've thought, hang on, we can do this? Or is it, take us through that sort of thought process?
Look, I have a philosophy, right? And it's really simple. It is like help first. So I walk into any meeting, any situation, any event, and I always try and think about how can I help someone else, right? And I put myself in this mindset of give first. And I think the true nature of entrepreneurship is that entrepreneurs are naturally interested in what's going on. And through that process of understanding other people and understanding what's important to them and understanding what's limiting them opportunities. And I've learned to put a process around that to work out which opportunities are worth solving and which opportunities are not worth solving. And I'm quite structured in the way that I take the things I do and take the way that we operate businesses and break them down into things that become easily understandable and easily repeatable. Yeah.
Yes.
And so I've ended up like, I was the chief entrepreneur of Queensland for 18 months, which is a government appointed role. And during that, I did 330 speaking events, and it's a volunteer role. I was doing it while I was running my tech company, while I was capital raising, while I was expanding internationally. And a lot of those events, people ask you, like, you say, what did you learn here? And what was the lesson of this? And what would you do differently? And so I tried to be really thoughtful about those things. And the last couple of years, I'm now an adjunct professor in entrepreneurship at QUT. And I don't get any money from that. I literally just do it to help young people coming through to take the things I've learned, put them into a system and go, if I was going to build a business today, right, and I found a problem, here's the process I take that problem through to work out whether or not it's worth investing in.
You talk about worth investing in, you're talking about money, or you're talking about time in that? Might probably both.
Both, because as an entrepreneur, you invest your time. That's probably the most currency you have. But if you want to scale that thing, then you need money from someone at some point. And investors, and I'm one today, right? Like, investors are very thoughtful about what they invest in. They have a process that they go through to make investments, and they've got a lot of alternative options. So I spent 12 months at QIC, Queensland Investment Corp, working in the private equity and venture capital team, and just the understanding of how a deal goes through a venture capital fund process really gives you good insight into what you should think about if you're an entrepreneur.
But in terms of that, I think a lot of people understand some of those things around what you're looking for in terms of starting a business. But you're talking also about what to look out for to rule it out, right? To put a line through to say, no, this isn't worth any more time, effort, or money. So can you talk us through some of those thought processes around where you can easily, because I look at it from an investment perspective in terms of investment markets and share portfolios or whatever it might be. Whereas if I look at a company, I can see something that I can put a line through it because it just doesn't make sense on that. That's great. I can stop doing any more work on that company because I have put a line through it. It's a deal breaker. Take us through that process from your perspective in terms of businesses and entrepreneurs.
Sure. The very first thing I think about it, if I'm looking at a business opportunity, and this is what I coach emerging entrepreneurs on, is does the problem you're solving, is that problem important enough to solve for the customers?
Yeah.
So do they really value it? And do they value it more than they value other things? So if they had a choice of where they'd spend money, it doesn't matter if it's a person, you're selling a consumer product, or if it's an enterprise and you're selling a B2B product. Customers always make decisions about, will I buy this or that? And it's not always just, will I buy an apple or an orange? It's, will I buy an apple or will I put fuel in my car? So you've really got to understand the relative value of the product that you're offering, i.e. the problem you're solving, to the customer. That's the first thing, right? And if it's not high on the relative value kind of spectrum, then you're always going to be competing with a lot of things outside of your control, right? And so I think those are bad investment opportunities from a time perspective as an entrepreneur. I think the second step there is a price kind of question. Can you sell whatever it is you're creating, whatever solution you have to a problem? Can you sell that for a good amount of money as a unit price? Can you make enough margin on it to invest into the other aspects of your business so you can scale? Things like team and marketing and processes and compliance, all that kind of stuff. Because if you can't make enough margin, then you just don't have the capacity to scale, right? And so there's the difference between a product. See, companies go through this journey, right? They go from an idea to a product, then they go from a product to a business, and then they go from a business to a scalable business, right?
Yeah, okay.
And if you can't fund that, you can't fund that, right? And it's highly unlikely that an investor will fund something that doesn't have good unit economics, right? So I think first thing is about relative value to a customer. Second thing is about price and margin, yeah? Third thing is about need. And that really is like things where the customer has to buy it, regardless of market, all right, and regardless of market cycles. Yeah, so if there's a problem that they have to solve because it's regulated, or it's a problem they have to solve because they need it to as an input to produce their business, then they're better problems to solve than things that are optional. So I think that's important. Then I think about competitor, right? And I think about this kind of law of the 800-pound gorilla. It's great if you compete with an 800-pound gorilla in a market that is not their core market, because they don't put their A team onto the core market. And as an early stage company, you can be nimble and you can be quick and you can really truly understand the customer and build something purpose built. And if you're competing with the B, C, D, F team, that you can win. And in our tech company, we won. Like, we were competing with a company that was multi-billion-dollar company, and we beat them nearly every transaction. Yeah. But if you compete with Google in ads, it's so unlikely. It's not impossible. It's just so unlikely that you can win. There's probably a better problem for you to solve that has a higher probability of winning. So I think about competitive landscape as a really important thing. I think about compliance as a thing. You use the Airbnb and the Uber example. They had to invest so much money in changing regulation. And yes, some companies can get access to capital to do that, but most founders, most companies can't. So structurally, is it legal question, or do you have to go and change the law? If you have to go and change the law to make this work, it adds a layer of risk and complexity that you probably don't want in most cases.
Yeah, it might be harder than it needs to be. And those are the Uber and the Airbnb ones are very specific examples of founders, organizations, the backers and the VC firms behind them, and all those types of things. You'd have to be in those situations to actually have a chance.
Exactly. And like the Australian market, we are building we're early on the journey to build a deep ecosystem where all the stakeholders can come together and have that kind of influence. And we'll get there, there's no question, right? But right at the moment, I think the power of those ecosystems in other jurisdictions means that they probably have the highest probability of building those market changing companies that have to change regulation.
Yeah. In terms of RedEye, I'm interested in digging into a little bit about your journey there, because that's a company that's started in 2012 and over a decade scaled presumably very quickly towards ultimately an exit. Do you want to take us through the idea stage and even in terms of bringing on investors or whatever you might have done along that process?
Yeah, sure. So we started in 2012, the company officially. We came up with the idea in 2011. We took 4 months to do market validation. So we went and spoke to people about, do they have the problem that we saw, and how are they solving it now? And really importantly, Dion, I think one of the things that I would say is super valuable for founders these days is when you think about doing market validation, thinking about not just, is there a problem and should I solve it, or who's doing it now, but also thinking about why the solutions that are in the market now aren't delivering the value that you could get. So what are the barriers to adoption, right? The barriers to value creation that the customer is currently facing, and how do you design a solution that overcomes those? And that's what we did, and that's why we built a completely different pricing model to what was in the market at the time. It's why we went cloud. And you think about it can influence a lot of how you go to market, and I think that's really important. So we started there. We started with targeting people we knew, and so we had relationships in the mining industry. We went and spoke to people in the mining industry. After a while, a couple of guys said, we'll give you a go. And that's how we got our first contract at BHP. And from there, we just worked our butts off to do a really good job. And we genuinely partnered with them. We were able to get pulled from BHP into Shell, into Arrow Energy at the time. We were funding this ourselves, my co-founder, Randall, and I. We weren't taking a salary. We were paying software engineers to help us do it. We were doing all the sales and marketing. And it was very, call it a scrappy business. It was very a guerrilla warfare kind of business.
Yeah.
We had this kind of pivotal moments in your business where you go, holy gosh, this is different. And so one day in 2013, we had an inquiry from a company in Peru, an inquiry from a company in Hong Kong, and an inquiry from a company in South Africa, all in the same week. And we were doing no outbound marketing. And we're like, okay, there's something to this if we're getting that kind of outbound marketing. And so from there, we thought, I'd never scaled a business internationally, and nor had Randall. So we thought, let's go find some people that we could put onto a board that could help us do this. And it took us months of going and talking to people and going, hey, we're looking for someone that can help us on the board. We can't pay them because we don't have any money. We're not getting paid ourselves, but we'll give them some equity. We spoke to a lot of people. We ended up shortlisting 4 people. And our kind of logic was, let's find someone that's voice of the customer, that comes from the customer industries that we want to service, that has run a really substantial global business in that sector. Let's find someone who's grown a tech business like ours, scaled it internationally and sold it. And let's find someone that's grown a tech company like ours, scaled it internationally and listed it, because we wanted that flexibility, right?
Yeah.
And then let's find someone that can help us think through, how do we do this structurally, from a legal perspective, from an accounting perspective, from a capital raising perspective. But we found 4 really great people. We got them in a boardroom, and because we wanted them to meet each other, we wanted to make sure that they had the same values as us and they would be supportive. And 3 of them ended up agreeing to be on the board. And it was at that meeting that they literally said, one of them said, can I invest? And I looked at Randall and he looked at me and we went, yep, please. And we raised our seed round that day. So that was $500,000.
Yep.
That was the end of 2013. In January 2014, I said to my wife, I'll see you on your birthday, which was the 12th of May. And I packed a bag and I went to the US. And I went there to see if the business was relevant in that market. And so spent 5 months traveling around and going to trade shows, talking to different people in different industries, talking to lots of VCs. My first time at Sand Hill Road and Silicon Valley. Lots of stories about that. And anyway, set up in the US in Houston and hired a guy and started. the oil and gas market was on the way up in Houston at that time. Yeah, over the next 6 months, we ended up scaling the team to 13 people in Houston, won 7 proof of concepts or pilot projects. And then the oil and gas market tanked. And we went from 7 people to 3 people to 2 people to 1 person.
Okay.
6 months after that, and learned a lot of lessons about international expansion.
Yeah.
And so that was our first international expansion lesson. And along the way, I came back to Australia, and I went back to the US and back to Australia. And anyway, one of those meetings, back in Australia, I got introduced a mate of mine. I'm talking about we're growing, we've got some opportunities, we should scale this thing. And he goes, you should speak to a friend of mine. Picks up the phone, calls this lady. And she goes, oh, yeah, happy to have a chat, blah, blah, blah. And she goes, I'm going to introduce you to a guy. And she introduced me to a guy at our first institutional investor. And in the next week, I was on a plane down to Sydney, and I had a chat with a really great guy at Macquarie. And Macquarie became our first institutional investor, so Macquarie Capital. And so January 2014, we raised our Series A, and we scaled the business from kind of 4 or 5 people then to 11, 12 people. And yeah, we just learned some lessons from the international expansion and really thought to ourselves, what markets could we be in that are less impacted by cyclical changes? And so we looked at power and water in Australia. We invested in power and water people and marketing, and we built out a really good brand there. And then we got pulled back into the US, into the water industry over there in 2017. We raised another round in 2017. We raised a bigger round in 2018. We raised another round in 2022, and we exited in December 23.
Yeah, okay. And have you got any numbers around some of those sorts of things, or are they private details, or what have you got there?
Look, we raised just 33 million total.
Yep.
Like our last round was 16 million from Australian and US investors. We ended up exiting to a really great company, super large global company. We'd been competing with them in the market. They really liked the fact that we were cloud and we had some technology that would extend their platform. They had great customer reach and could see the value of bringing us in. So yeah, the exit price is more than 50 million Oz.
Yeah.
But I'm not going to talk about it exactly.
Yeah. No, it was substantial. We'll say that.
Definitely. Yeah, it was great.
So in terms of, that's an awesome outcome. In terms of the process, I'm really interested in the psychological process you go through as a founder. One, when you're bringing new investors in, so you've got the seed round, you've got other various rounds, and then you've got Macquarie as well. And then also when it comes to the exit and that process, but maybe we just start with raising money. Obviously, you did your seed round, sounded like it was almost a surprise, which worked out very well by the sound of it. But then when you go to the next phase and you're dealing with Macquarie Bank, what was that like in terms of you've gone from people you've got to know on an individual basis versus then it's an institution? And no doubt people have got opinions on how you should do things and that sort of thing. What was that like navigating that?
Fundamentally, raising capital is a people game, and it is about building great relationships with people who share your vision and feel like they can contribute to the journey. And as a founder, it's about building a business that is investable. And so understanding what that looks like to various investors and being able to effectively communicate that in a way that is concise and respectful of the investors' time and priorities and everything else that's important to them. You need to become more and more, I would say, mature as an organization as you raise bigger rounds of capital and you have to demonstrate both traction and compliance, right? And having great people on your team is super important, and having those people be able to do the stuff proactively so that when an investor says, show me all your customer contracts, they're there in the data room, or show me all your employment contracts, or show me your audited financials, or show me your forecast and what your forecast accuracy is, and that kind of stuff. That is, I think, they're the things that you build just in time as you're a founder. So some founders get ahead of themselves and they invest too much money too early in things that aren't really needed yet. So it's a bit of an art to to be able to sequence things as it makes sense and remain capital efficient as an organization. I think one of the most important things is about taking ownership over the responsibility for other people's money. As a founder and as an investor, I feel personally accountable and responsible for the things that I do, and I care deeply about the responsibility that other people have entrusted in me. And I think that it needs to be genuine, because people don't make, I don't know any VCs that don't care about the money that they're investing. They care deeply, and they have to have conviction in order to get it through their investment committee. So I think founders have to have that level of conviction as well.
What was the biggest learning curve from raising that first $500,000 to raising multi-million-dollar rounds later on? What was the biggest learning curves?
Dion, I had consecutive learning curves. So I was learning about managing shareholders. I was learning about managing complex financial, responsibilities, and a business with a set of fairly, I wouldn't say complex, but fairly interdependent financial performance. At the same time as scaling a team, I scaled to over 100 people. And we started in a time where there was no talent pool, right? There was no startup ecosystem in 2012. It was very immature. And so we had to go and build people we had to build product managers, and we had to build customer success people from scratch. We had to teach people how to sell SaaS. There was none of that.
Yeah.
We had to build devs that were comfortable building stuff as opposed to doing waterfall. So there's a whole change. And so very much I learned a lot about people. We also learned a lot about tech. The tech ecosystem changed so quickly, and it's changing even faster now with AI.
Yeah.
So you just have to, as a founder, I think, and a CEO specifically, be really cool with running multiple concurrent streams of work and pushing yourself outside of your boundaries all the time.
Yeah. When it came to the exiting the business and the sale, and you obviously had options, and I read an interview where they comment on the lines of there'll be a natural process here whereby it'll either be trade sale or it'll be an IPO, and you'll prepare for either of those optionalities. Was it as cool, calm, and collected as that quote made it sound, or was it? Take us through the process.
As a business scales, you hope that you get some things that become data points that give you confidence that the business is becoming more valuable and more interesting to a potential acquirer. We specifically built this business with a view of finding a problem that we could solve, building it into a global business, and then selling it. I've got some good mates that run really large businesses that are building multi-generational businesses. We weren't doing that.
Yeah, okay. And you knew that from the start. This is when,
from the start.
Yeah, okay. Yeah,
right. So we always had this plan. And so along the way, we started getting inbound inquiries in 2015 or something like that. And we started talking to various M&A executives from large companies that were going, hey, we like what you're doing. Can we have a chat to you? We had that 3 times, basically.
Yeah, okay. Yep.
Yeah. And so we got to a point where the business wasn't big enough to IPO. The market just was not right to IPO for businesses our scale and more generally early tech. So a trade sale made sense. The board were both really supportive and also that was the right time. Like Macro had been an investor since 2014. Right? Yeah. So it was absolutely
so you're talking 10 years, right?
Yeah. And so we brought a chairman in, and his mandate was to help us exit the business. My co-founder took over as CEO. I finished as CEO July 22, burnt myself out, right? Being chief entrepreneur at the same time as doing the last stuff in my company, it was literally, I'd run out of steam. Yeah. The board acknowledged that. Running the business through COVID and trying to scale through COVID was definitely challenging.
Yeah.
So Randall stepped in. He did a great job as CEO. He brought in a good CFO. We had a new chairman. I was on the board, which was great. And we had some really great board members. And so the team pulled together really well. We had this big US company called Fortive that reached out to our US investors, EIC, and said, hey, we really like what RedEye are doing. Can we have a conversation? One of their guys at EIC led that conversation. Our chairman stepped up and ran the process. Randall as CEO and Steve, who was the CFO, did a cracking job. It is an acquisitive company. They have a process that is a playbook. It's down pat, and they just ran that process smoothly, and it was very efficient for them. It crippled a little company like ours. It was a hugely intense process to go through as a small company. It's
From a
sometimes
DD process or from the entire process of being ready for sale?
Oh no, more from we were in the sale process. We'd agreed price, and they were going through doing all their DD and final terms. There were thousands of information requests. They had 70 odd people working on the process on their side.
Wow.
70.
Yeah, wow.
Yeah. So this company, they're experts at buying companies. They're incredibly good at doing it. And so for a little company like ours that, it was definitely an experience. Lots of lessons on how to go through a process with a really big company. Probably too many for right now. But yeah, we got a good outcome. The team transitioned to working for them. The shareholders, by and large, everyone got a good outcome. It was a success in that regard, and has enabled us to go on and do some really cool things.
What was the biggest surprise in that process? So you go in, you're doing the negotiation and the deal, and you've got a certain idea. But what did surprise you the most as you went through that?
So the acquirer's process is very much about how they integrate the business. In fact, how do they integrate the products into their business? Right? How do they integrate the people into their business? So it was very much about not necessarily keeping the RedEye business unit as one, but bringing all the good parts of RedEye into their bigger organization and really being able to create value for their customers that way. We built a small business into a relatively good size Australian business with a great customer base and a really great team. And so we were a very people first company. And when you move into a really big company, that is, the acquisition process is more about process and systems and compliance and warranties and governance and that kind of stuff. So yeah, that was a really interesting learning for us.
What was it like post-exit? So presumably, like you said, you're burnt out at a certain point. It's obviously a really busy time. And then suddenly business is sold and presumably quite life-changing in many respects. How did you go with that? What was that process like?
It's taken me 18 months to feel like a human again. To genuinely get to a point of mentally and emotionally to be, I think, like about now, I'm firing on all cylinders and really excited about the potential, and I've got a whole bunch of things coming together that I could not have done 2 months after the deal or 4 months after the deal or even 12 months after the deal.
Yeah, okay.
I think as a founder, if you're the CEO, and I'm a CEO for 10 years, right? Grew it from 2 people to genuinely an international business. You put your heart and soul into it, and you build up you carry an enormous amount of personal weight or energy. And I didn't quite realize it because you just bury it and keep going.
Right?
And people often reflect when they see me now and go, geez, you look lighter, you look happier, you look more energized. And I really respect founders and the effort they go through to build companies and the personal toll it has on them that's often just buried. And at some point that has to come out.
Yeah. Wayne, with that sort of stuff, would you do anything differently in that process while you're the CEO? Or is it something that you've just got to go through that in that way to get the outcome you need to get to, and then you deal with the rest of it afterwards? Or would you do something differently along the way? Or,
Dion, there's a bunch of things that I have implemented over my time. So I think mental health and physical health are critical as aspects of any person's capability. And so investing in those is something that I try to do a lot more of. So that's one part of it. I think you can't sugarcoat the fact that there are periods of intensity and enormous stress and pressure. And there are periods where you just have to go all in on closing sales or delivering, right? Or bringing that next product to market. And so work-life balance, I don't think about it as in getting work-life balance each day. I think about getting work-life balance in blocks And there are some blocks where you have to double down on work. And there are some blocks where you can bring back your fitness or bring back your family time or get that mental health time. Or, do you know what I mean? And so that's really important and really practical for me anyway. That's one thing. The other thing is 10 years as a CEO, plus the external stuff that I was doing, the various Queensland government things that I was trying to help. I was trying to help build the ecosystem. And I had a view that karma, the more you put out into the ecosystem, the more that it comes back to you in various ways. And so I still believe in that, right? But I think there's an amount of that you can do that makes it more sustainable. So I would not, if I was to do another CEO role, and I won't, but if I was to, I would say 5 to 8 years as a CEO is great. But I'd be looking for a transition plan, building succession planning, so that 10 years, if you're building something from scratch, 10 years in my experience, it's too hard and too long, and it has too big a toll.
Yeah, that's interesting. And is that the advice you give to people when they're starting their business? Like, you've got that sort of, or is it case by case, depending on what the business is, what the industry is?
Yeah, I think it's like driving at night with headlights, right? The road gets exposed to you as you proceed. And so I think having some fundamental operating principles around looking after your health, looking after your mental health, looking after your family, those things should be consistent through the journey. Notwithstanding, you need to do it in blocks, not daily. But then as it comes to what's your role in the business, and is there a time for you to step into a board role or step into a different role? I think that depends on the way the business grows, on your personal expertise, your personal energy, your life situation. Yeah.
What was your biggest strength in terms of when you started that business, what you brought to the table, and even what your biggest weakness was and how you overcame that? What are those two?
Gee, biggest strength, I think I'm really good at harnessing people to move in a common direction. And so I was able to encourage and, I guess, lead a team of people to achieve something that's pretty spectacular in terms of the value we added to the companies we worked for, our customers, and the opportunity that we had and the contribution we made to the startup ecosystem, and ultimately the return we provided to shareholders. So I think bringing people together around a common goal and driving that to an outcome is a great strength. My biggest weakness, I've got stacks of weaknesses, just practically speaking. I can be pretty single-minded about things.
Yeah, right.
And so there were certainly times when, some of my board members would go, hey, what about this? What about that? And in hindsight, I should have taken a little bit more coaching in some situations. So I think I had a goal and I had a plan, and I was working the plan to get to the goal. I think so, definitely being really responsive to hearing other people's feedback and maybe looking for easier ways to get things done. Smarter.
That's interesting.
Smarter
Because
ways.
it can be that single-mindedness can be a strength as well as it's a double-edged sword, right?
Yeah.
But yes, it makes sense. If someone's got some wisdom that they're trying to share, being single-minded might not help you hear it as readily as you might otherwise.
Yeah, exactly. Right.
Yeah. What about other people in business that you admire? Are there any people that come to mind in Australia or overseas that you really like the way they go about business?
Yeah, look, I've listened to a bunch of your podcasts and I've reflected on the different answers that different people have given. And one of the people that I really admire is Steve Irwin.
Okay, yeah.
The crocodile hunter. And what I admire about Steve is he was incredibly humble. He was incredibly passionate. He was super driven. And he literally made something that was a passion into a huge success.
Yeah.
And he created a community of people that believed, right? Because he was really thoughtful about how he engaged with the community, right? So his mission wasn't really to make money. His mission was to build a community of people that truly believed in conservation, right?
Yeah.
And so when I break that down and go, what are the lessons from that? I look at the way that people are really compelling in the way they communicate, and they're good at understanding what drives other people. And I think that's a super important trait for an entrepreneur, because often you have to start with no resources And so the best capacity that you have is other people. And so over the journey of RedEye, like we had incredible supporters in the community, other businesses and business leaders that would mentor and give us time and promote us because they believed in what we were doing, not just in the problem we were solving, but in the fact we were trying to build a business in Queensland that helped to build the innovation ecosystem, the startup ecosystem that was creating a new industry and new jobs. And people were excited by the fact that we could build something in Queensland, and that problem was a problem that was relevant globally, and we were solving it from Queensland. And so we didn't just build a story around, hey, we solve engineering drawing management. We built a story around, hey, we're building this new industry in Queensland and creating jobs and opportunities for our economy and our kids. And we should be all really proud of what we can do. And that was, we won so many customer contracts because we had amazing people go, hey, you should talk to these guys.
Yeah, okay. Yeah, that's really powerful, isn't it? It's sometimes underestimated just how powerful community is and that mission of what that underlines the journey.
Yeah.
What about books and those types of things? Any particular books that you would like to tell us about?
Yeah, I'm a big podcast fan. I do a lot of driving. So I live an hour and a half away from the city. And so I listen to podcasts, and I think podcasts are super powerful for if you listen with the idea of what can I learn? What could I do? And I like the idea of podcasts that cover different aspects of your life. At the moment, I'm interested in health and longevity. So I listen a lot to Andrew Huberman. I think he's got a great kind of theme and has some really compelling people on the podcast. That's an area that I'm interested in. I think in terms of business experience, one of the most important lessons you can learn as a founder or even CEO is that you're not alone, even though it's a lonely journey. And so podcasts like yours, and there's great podcasts in the US where other people talking about their journey as a business professional, as a CEO, as a founder, as an investor, and the things that they've experienced, even at a scale 10x or 100x your company, makes you realize that it's okay.
Yeah. Yeah. It's a really interesting process, having conversations with people who often are somewhat isolated in the role that they're doing.
Yeah.
Because, and you'll know exactly what I'm talking about, even if you've got a co-founder, you're often just head down, bum up, doing what you do. And I think we've done well over 100 podcasts now. So I've talked to 100 different people just on this show who have been in those types of roles. And it's a very common theme that there's a lot of isolation out there when you're building a business over that sort of 10-year plus span. And you don't think of it.
No, I agree. You got to have good people in your corner, right? And sometimes those people can just be the voice you hear on the podcast. And sometimes that's the peer group that you go and build. Yeah. And sometimes it's a group of mentors that you go and get.
How has your view of what success has changed over the years?
It's never been about money.
Yeah.
I believe money comes when you do good things, right? Yep. Like I wanted to be financially free.
Yeah.
That's always been a goal of mine to provide for my family. But I don't get up and go, I'm building a business to make money. I go, I'm building a business to solve a problem, to create value. And if I do a good job, money will come. So success for me is about, can I solve a problem I really care about for people I really care about? That's the first thing, right? The care about people part is really important to me. I get energy from seeing other people grow and other people realize that they're more capable than what they thought they were, or giving them something that makes their life easier. Just removes the frustration, removes the stress, helps them learn the lesson in an easier way than necessarily the hard way. So I really, for me, success is very much about empowering and helping people. And, even now I'm investing in companies and supporting founders, and I really enjoy the coaching and mentoring and support role. And I've learned a lot of lessons the hard way. And so being able to share some of those is certainly fulfilling.
Just tell us a little bit about your business and what the next 5 and 10 years look like from your point of view.
I think it's an incredibly exciting time. We've got AI that is going to transform every industry really quickly. And how can I invest in AI companies that deliver practical transformation that's contextually valuable. And so I've got a couple of AI investments at the moment, one in the climate tech space that is literally saving thousands of hours around climate reporting. And it's super exciting to see the benefit when you see like a sustainability leader's eyes light up when they realize they don't have to do stuff in spreadsheets and just be a data entry person. They can actually do what they're passionate about, which is transforming their organization so that it's more sustainable and more viable long term. So that's one. Yeah, we're launching an accounting practice specifically focused on founders and investors, and really excited about not just providing the accounting services, but the advisory services around things that we've learned that help founders to scale businesses more efficiently, and things we've learned around how to invest, what to invest in, what's a good company, what to look for, all that kind of stuff for investors. So we're really excited about that. So yeah, they're just two. I've got a portfolio of 12 investments. Some I'm really active in, some I'm less. I just don't need to be active in. And yeah, I'm enjoying building a community around that.
Wayne, thank you very much for your time. It's been fantastic hearing about your journey and getting some insights from you.
Thanks so much, Dion. Really appreciate the opportunity. It's a great podcast, and I hope everyone actually gets something they can take away.
All right. Thanks very much. That's great. Thanks, Wayne.
No worries, Dion.